So good morning, everyone. I'm happy to be here, and it's fun to be back on those conference. For those of you who might not know Osisko Mining, that's the second iteration of Osisko. The first one was related to Canadian Malartic, that produced roughly 1 million ounces before took over for $4.3 billion. Initially, they invested $80,000 to get the project from a bankruptcy. They develop it and generate a lot of value for shareholders. So that's what we do at Osisko, and this time is no different. We are actually advancing quite fast. High-grade gold deposit in Quebec, in Canada. It's a world-class deposit, and let me just show you these pictures. It speaks for itself. They're not in a museum yet, but I'm pretty sure they'll end up in a museum at some point, Terry. Some of the intersect we had in last year, for example, hit 90 kilos of gold. So there's a huge amount of gold on that deposit. It's really exciting. So the foundation of the project is the mineral resource. Last February, we published 6.1 million ounces at 8.6 gram. Most part of it was inferred, but 1.9 million ounces were measured and indicated at a grade of 9.6. So for next year, this year-end objective, we expect to update the market with the mineral resource that will have 3 million ounces or more in measured and indicated, and we do expect the grade to be in the range of 10 grams. Why 3 million ounces? Because we want to, that will be the foundation for the feasibility study to be delivered in probably mid next year. We want to have a production profile of 300,000 ounces for the next 10 years. So that's what we're working on. Those are our expectations. So when you look at the PA we delivered in April, based on the resource from February, that was representing all the drilling done up to September of 2020. So since then, we probably drilled 400,000 meters more. So as you'll see in the next resource update, you'll see the results. But let's look at the results from the PA we delivered. We were quite conservative, using 1,500 US per ounce for gold. It still was quite robust, even at that low gold price, delivering 39% IRR after tax, 1.5 billion NPV after tax as well. If we would have used 1,800, that would have bring up IRR north of 55%. And NPV north of $2.5 billion. So you're already asking yourself, okay, what's the market cap right now? It's roughly $1 billion. So there's the opportunity. On top of it, in terms of CapEx, we are expecting in the same ballpark, $550 million. We do, our preferred option would be to go to full depth to avoid going to the public market for the mine build. So we are in discussion with our traditional partners in Quebec, pension funds and Canadian pension funds. So we'll probably expect some news after the feasibility study on that front. In terms of all-in sustainable costs, still pretty low compared to some of the peers, cost per tons as well. We do envision production, full production by 2025, and probably beginning of production by the end of 2024. There's a catch up there. If you are starting production by 2024, it means that you need to have your permit probably by the end of 2023. But here's the catch up. At Windfall, we do have an exploration ramp, more than 9 kilometers of underground development already. So what it will allow us to do is, once we receive the permits, which we expect by the end of 2023, we'll be able to begin to stockpile ore at surface. And what it will do, it will reduce significantly the risk inherent to ramp up. So we'll be able to stockpile ore for almost an entire year while we're building the mill at site, and that will ease up the ramp-up phase. That's why we envision full production by 2025, sorry. On that map, you can also see the resource category by color, namely in red, the measured, in blue, the indicated. And as we advance, we are actually converting more in the length portion. The length portion is way more rich. It's probably grading around 11 grams. So most of the production will aim towards that at the beginning. If you look back in time when Osisko acquired the project, the resource table was roughly 1.5 million ounces. So we basically more than quadrupled the size of the deposit in the last 5 years. When you look on this one, you can see the stopes design. And you can also see on the green stars the location of the 2 bulk samples we realized so far, with positive reconciliation of 126% on the left one, which is called zone 27, and on the reconciliation of 189% on the right side in length. So it tells us that we've been quite conservative on the grade size with the capping as well. And that's where we want to be, under promise, over delivered. But more to it is we do believe that the metal loss that the resource anchored with the capping will be probably retrieved back once in operation, and that could offset some of the mining dilution as well. And finally, you can see the triple length bulk sample that we intend to probably extract early in 2022. On the other portion of the deposit, you can see it's still open at depth. The 6.1 million ounces are mostly enclosed within the first 1,200 meters. And we do know, since we drilled a few holes there and there at depth, down to 2.6 kilometers, so we do know the continuity of the mineralization is already something demonstrated. It's just a function of time. But we won't drill it right now because that would be not the best use of money, but we'll certainly define it on a yearly basis once in production. A few notes on because we're not just developing the deposit, we poke a few drill holes there and there to see, if on the regional side there were other deposits around. And what we've been able to is this summer in June, we published a new discovery located less than 1 kilometer north of the actual deposit that you can see on that picture in dark red. So what we did was simply testing a parallel structure that probably constitute a fluid pathway for gold mineralization. And we discovered 27.4 grams over 6.7 meters. So as a start, it was not bad. And subsequently, we did publish those type of results in September. So they were quite significant, some of them 60 grams over a couple of meters. So it's no different than when we discover length. And length in the resource base now stands for 3.6 million ounces. So that's a start. It's too soon to call if it's, but it has certainly the potential to become something significant. So stay tuned on this. I particularly like this slide because in the last month, we've seen a lot of movement on those gold-producing assets. Half of them merged, and some of them took over recently. And the red indication just show where Windfall will sit in terms of gold-producing assets. Certainly in the top 5 best-producing assets in both U.S. and Canada. More to it, if you look at the current price, for example, Brucejack just took over last week, or early last week actually, for $3.5 billion for a similar production profile. So that gives you an idea of a potential value. So on these slides, it's just showing the life of mining schedule that heavily rely on lengths because the grade is higher, and for the simple reason that you want to accelerate your payback for a better IRR. So it's just simple math based on grades. So I'll go quite fast. In terms of recovery and metallurgy, it's quite simple. It's gravity circuit with CIL. So no worries there. It's pretty clean. On the study, we use 94.6% recovery. We do know coming from the bulk sample in Lynx, for example, where we achieve 97% recovery. So there's still room for improvement there. But again, we remain conservative in our approach. That's the way we do things at Osisko. That slide just showed you all the surface layout, mining infrastructure. And we put the mining, actually the footprint of the deposit, surface projection, just to show that everything is really constrained in space. One of the ideas behind it is to reduce the footprint in terms of environmental requirement. But the other intent behind this is if in year 6, 7, or 12 we want to consider a shaft to increase the throughput, then we'll be well set because the deposit sits just underneath most of the mining infrastructure, so we'll do it at a lower cost. And again, there's significant room to grow, and for those of you who know the Osisko, you probably heard that they drill like crazy. We're not sure that they should do that, but we're convinced and almost proud to do that, because in mining, when you want to put a deposit into production, there's no shortcut. And we've done it at a really low cost, $38 US per ounces. The world average cost is 61. In Canada, it's $81 US. So we've been quite efficient. If you put it that way, every time Osisko drill a meter, we generate 5.3 ounces. So that's quite a good price for the money. And again, we recently reduced the drilling pace. We do now have 15 rigs at site, and do expect a resource update in early January. I already spoke about that one here. This too as well. There's 2 minutes left. So in terms of catalyst, expect a power line agreement update before year-end, completion of the infill program, resource update, I just mentioned it, feasibility study sometime mid-year next year. We'll advance the triple length bulk sample, probably extraction early in 2022. We'll continue advancing test stope as well, because we want to build more and more confidence on the deposit. We are advancing the 50,000 meter drill program at Golden Bear, which could be the next deposit in the district. And we are well financed as well. So I guess that's about it. I guess there's 1 minute left.
Perfect on time. Thank you. So we have 1 minute for questions. Are there questions here, please?
You are mentioning the power line agreement. What would that be in terms of CapEx potentially?
That would probably shave off 50 million from the initial CapEx, but we do know that inflation is kicking in, so that's why we are working in the same ballpark figure, 550. 550 million. Yeah.
More questions? Okay.
Is caribou going to be heap leach?
Sorry?
Caribou, would that be heap leach?
No, I think it's a different project, that one, but we have a caribou zone, but the caribou you're mentioning, it's Osisko development. But that's going to be a mill.
Oh, it's a mill.
Yeah.
Okay, no more questions.
Thanks,
Thank you
everyone.
very much.